Yes, thank you very much, Adam. So, if you guys have been looking at any financial articles or reading the news over the past week, you've been hearing a lot about inflation and potentially even a bubble popping. So, let's look back over the past week. What we've been seeing is that a whole bunch of lockdowns throughout the world are being lifted. In the US, they're being lifted at a significant level, so people are deciding to hop into their cars and drive to other cities and start traveling again. However, unfortunately, these during this week, we've had a fuel pipeline, the main fuel pipeline, actually get hacked. Long story short, a lot of the US isn't being supplied with gas, so people can't travel or they pay a lot more for their fuel. And different to how it is in Europe, in the US, it is very, very likely that you need your car to go from A to B because places are so spread apart. Now, because people need to pay more for fuel, they're starting to hike up the prices in other places. And when they actually get to the place that they wanted to go to, they're buying a whole bunch of stuff because, as you and me, if you've been saving money throughout the coronavirus, you're just ready to spend that money. Now, we've talked about inflation previously, but what happens when a whole bunch of people are sitting on a chunk of money that they've not been using, and then they start circulating it within the market? Money profits. Well, as soon as you start spending money, multiple people start profiting from it. So the more it moves, the more wealth we generate. And the more the money moves around, the more money you can actually make. So a lot of people are deciding to increase their prices, not only because they want to make more money, but also because their supply is running short. So as a result of this, we are actually seeing a potential threat of inflation. Now, if we're looking at inflation, what it means to us as investors, it can actually have a significant impact on the companies that we're looking to invest in. And what I'm going to do now is try and show you how this can directly relate to the markets that we're experiencing by actually putting the technical analysis that Luke's been talking about into action. Now, if we look at the S&P 500, the S&P 500 is usually used as an index representing the entire US market, the most important market in the world, and it is consisting of 500 companies. Now, these 500 companies aren't all represented in the same way, but they are individually analyzed and given specific weighting, which you can see right here. Now, if you look at the top 10 companies of the S&P 500, you have Apple, Microsoft, Amazon, Facebook, Alphabet, and Alphabet Class C. So that's Google. There's two stocks there because they have a different setup. Berkshire Hathaway, which is Warren Buffett's company, JP Morgan, a huge bank, and Johnson & Johnson, which is the vaccine creator, and we have Tesla. Now, apart from Johnson & Johnson, JP Morgan, and Berkshire Hathaway, 7 out of the 10 most represented companies in the S&P 500 are tech stocks. And they're the most weighted as well. These 7 companies amount to 20% of the entire S&P 500. That means that if tech is actually if we're in a tech bubble, 20% of the S&P 500, the leading 20%, would plummet. Now, to look at the price action that we've seen over the past week, because we've experienced this whole panic of inflation. Now, if people see a panic of inflation, they're more likely to need more money. So in turn, they will sell what they don't necessarily need, for example, investments in the S&P 500. So what I've done here is I've gone onto a tracking tool, on a chart analysis tool, and applied technical analysis that Luke has been talking about over the past few months and weeks. So what you can see here is the 200 moving average is the yellow line. There's the 100 moving average in red, the 50 moving average in black, and the 20 moving average in green. And I also drew you support and resistance levels of the S&P 500, which have been widely respected over the past few months. And what also has to be noted is that these candles all represent one day. Now, over the past week, we have seen a strong reversal in the S&P 500. This is when we've started hearing talks about inflation. Now, the S&P 500 has dropped significantly and actually bounced off of this resistance level, which, by analyzing what we've learned with tech being highly represented in the S&P 500, we would have to see a similar pattern in the leading stocks. Now, I've gone ahead and looked at all of these stocks, and what we can see, unfortunately, is that this pattern is not represented. So with Apple, we've had a slight dip below the 200 moving average, which is a significant thing to think about because the 200 moving average is one of the most respected technical analysis tools by investors and traders. If the stock dips below it, we can really expect a harsh drop. Now, this hasn't happened with Apple, it reversed, but it's hovering around this level. Microsoft, similarly, it didn't dip to the 200 moving average, but it did dip to the 100 moving average, and it is again hovering around this level, not being as secure. Amazon, well, you might have guessed, they have dipped below the 200 moving average with some hard red days behind them. Facebook actually is looking pretty all right. They released quarterly earnings, but since those quarterly earnings, they've had red days and coming lower, but they're still looking pretty all right. Google, well, they're doing just fine. There's not really much to say here. Google is not crossing any moving averages. But our hype stock, Tesla, which is closely related to Elon Musk's tweets and generally hype in the market. People like to listen to Tesla or Elon Musk and see what he has to say, but they've not been having a great time. Ever since they decided to get invested in Bitcoin around here, they've slowly but surely started plummeting. Now, plummeting hard. They are below the 200 moving average, which is the first time this has happened since, well, a really long time back, and this is the coronavirus pandemic. So they haven't been below the 200 moving average for a year, which is a very, very strong sign. And what we also have to consider when we're looking at all of these stocks, and all of them except maybe Google, have been going down. Now, if a company's stock like Apple's goes down, it's not just people like you and me selling, but it's institutional investors with billions and billions of dollars available unloading their positions. And this isn't just one or two of these people, but heavy positions are being sold across the board, whether that be Tesla, Facebook, Microsoft, Apple, or Apple. However, this is not reflected in the S&P 500. We did have 3 bad days, but the other 80% of the market are looking to make up for this harsh dip. So we can see that the rest of the market, which isn't involved in tech, is actually doing really well and not affected by these heavy fluctuations. Now, the ultimate tech stock, Bitcoin, is also dipping below the 200 moving average. So we could potentially see a hard reversal in Bitcoin and cryptocurrencies. Now, this is all a whole bunch, and it's just one moving, we're talking about the moving averages here, which is fairly significant. But I also went ahead and applied this with the MACD, which we just explained, the moving averages, and I also added the stochastic. The stochastic is a technical analysis tool which tracks if a stock is being overbought when you have the indicator at the top, or if it's being oversold when it's at the bottom. Now, when we're looking at this technical analysis of the S&P 500, we can tell that we're actually still doing quite well. The market, or these tools, are giving us buy signals because we're reversing from red to green. However, if we go through our stocks, as I mentioned, the seven stocks which represent 20% of this, are actually giving us sell signals. Apple isn't looking great. It's going south. Microsoft I'm hoping my computer can keep up with me here. Microsoft, although they have had good performance, these tools are showing us that we should actually be buying. There's pretty large differentiations between the two indicators, so potentially not yet a time to buy. Our next stock here would be Amazon. Amazon is also looking like it's potentially going to reverse, which is in itself a good thing. Facebook, very similarly, remember that they've been doing quite well. They are actually looking at a pretty clear reversal, so it would be a buy signal from these stocks, from these indicators. Sorry. And Google is actually not looking great either. So they are reversing hard. The differentiation here is still pretty large. And last but not least, let's look at Tesla, the hype stock. Tesla is nowhere close to being a buy signal yet. It's reversing hard. And the market isn't showing us that we should start getting into Tesla because so many people are selling it. Now, if we go back to the S&P 500, even though we are seeing buy signals here, and all three indicators are actually going down, even though the bottom would be a buy signal, what we have to consider is that low right now isn't that low. Because during the coronavirus pandemic, this is where we dipped, and this is how long we dipped. So it's a really, really long time and really far down that we can go if things go south. So even though in the short term this might not look that bad, if we're looking historically, well, not really historically, but just 1 year, things could go south a lot more than they are right now. So, considering all these things that I just talked about and analyzing the top 7 or the top 10 companies of the S&P 500, what does this mean to us? Well, considering that we will be spending a lot more going forward, people obviously have been selling their stock in a very, very heavy manner. Now, what does it take for this to reverse? Well, what we've learned about resistance levels, support and resistance levels, is that one out of two things is very likely to happen. Number one, it could reverse, right? So we could see the S&P 500 start rising again, as it has. And this could happen throughout all of these stocks that have been reversing or going down. They could now find support at this resistance level and start going up again. However, because it's happening across the board, how likely is that to happen? Everybody is selling, and we can see it in the data. The stock prices are plummeting throughout. Now, if that continues to happen, as we've learned with how stock prices move, a lot of people could start selling. The institutional investors most likely are taking profit right now. So they have already sold. The next step is for people like us or other people that are thinking about the same things to sell their stock. And that's when the crazy frenzy happens, where everybody's just trying to get out of positions. And that's when stock prices plummet even more, and you potentially have a bubble that pops. Now, what we haven't discussed yet is with this rising inflation, what country heads do usually when you have the rise of inflation is increase interest rates. Now, the increase of interest rates means that we all have to pay more for things like long-term loans or your mortgage, something like that. And especially big growth companies like the tech world are very heavily invested into the low interest rates. They need the interest rates to be lower. So if governments decide to increase those rates, these companies would have even more negative news because with interest rates rising, their revenues automatically decline. So in turn there is you have even less reason to buy a tech company because we don't know how far they will drop. Because looking at Tesla, as I assume most of us have done some analysis on Tesla, they're actually a true hype stock. They have nothing worth buying. So what does this mean for us as lead pass investors? Well, over the past 6 months, we've been doing a whole bunch of research and identified a lot of great companies that are on the market right now. Some of them being the ones that we talked about right now in this presentation. But when's a good time to buy or sell these companies? Well, look at the technical indicators. Look at the consumer behavior that we're experiencing throughout the market and how governments are not trying to react by raising interest rates. They're trying to see this as a simple passover. They're hoping that the S&P 500 bounces. Now, what happens if that isn't the case? Well, we don't really know. However, if the market or the bubble does pop, it is a great opportunity for us as lead pass investors to find great stocks, great companies to invest in. Does anyone have any questions? Hi there. Thank you so much for watching our video. I hope you really enjoyed it and I hope you learned something. If you have any questions, please let us know in the comment box. And don't forget to like and subscribe so you can learn more about our channel. Thank you very much and see you next time.